Through 8:30 this morning and just taking a quick look at the charts to see where things are trading at the moment. And we've just seen a bit of a downward move in the DAX. You can see here in the middle left chart, no real fundamental reason or breaking news headline that's driven that. Obviously, going through the first half an hour of trade, when we go through the cash open, typically see that just uptick in the overall volume. Downside, I guess, looking at that low print that we had back on the 9th, so 2 days ago. That's not too far from here, from the low print that we're seeing just a short while ago. And then obviously just sub there by a few ticks, you've got the S2 on the session. So US also negative in the futures, but hasn't really caught hold of that move quite so aggressively, which is fairly common. It's more an indirect move in sympathy with that weakness just seen in the European indices. But just taking a quick look at the S&P, obviously we've been keeping quite a close eye around that 2060 level. That proved to be a fairly, as 2260, a fairly solid technical level developing at the moment, and that was the strategy, which was, I know one of the live guys executed that very well. It was kind of that low print that we had back on the 10th. We tested it, and then we started to move all the way up to pivot and through to R1. So both targets were hit actually on that execution. But one thing's for sure, I think certainly from an equity perspective, extremely defining a bit of a range, but I would say that some of the moves have been quite whipsawing in terms of the lack of real fundamental new developments. But that's not really been an excuse for the market to really just fluctuate at times quite wildly, especially over the open. I'd be particularly cautious. I know some of you got caught out yesterday. And we have seen as well a bit of divergence develop at the opens in regard to some outperformance in the Nasdaq comparative to that of the Dow and S&P. I think there was been some broader strength overall in the likes of Apple this week. There was a positive broker note out of MS. What that means essentially is that these investment banks on the sell side put out their kind of recommendations, of which Apple was one for this year of 2017 as one of what they're looking for as their better performers or outperformers of the market. But probably more so a major influence has been the kind of pullback in oil that we've seen. Although it hasn't got to 50 yet, obviously we got down to lows yesterday evening. Shortly after the NYMEX closed down at 50.71, but that has been a bit of a headwind for the energy sector. Nonetheless, though, looking at commodities specifically, because Asia had a relatively positive session, and it has been led by surging mining companies overnight. Now, you might have seen that overnight snapshot I put in the chat room on Trading Live, but essentially you had Dalian iron ore up over 8% overnight. Now, Dalian is a province in Liaoning in China, which is kind of east of Beijing. That's kind of the benchmark measure of the measurement of, well, what I've just flicked over to my chart here. People will be generally looking and trading these metals speculatively on the basis of how they think how strong the Chinese economy will be, and then net demand coming thereafter. And yesterday, of course, we had some Chinese data that was interesting because it was the fastest pace of growth for Chinese producer prices in 5 years, which has helped lift industrial metals and other raw materials on the prospects, of course, that China will export inflation around the world via its supply chains. What you're seeing here then is really ever since Trump has been elected back in, well, really, let's go to November, in the US presidential election. Actually, Bloomberg had made a mistake there, so that should be over here. That's actually when the rally started to kick off, and you can see how just generally the broader positive sentiment that's been in play really ever since that November period. One thing, of course, to be mindful of. Piers was covering that kind of Deutsche outlook, and I know I spoke to some of the month twos about this yesterday, about the fragility of the global growth prospects outside of US. Now, a lot of this you can see timing wise, definitely catalyst, the trigger point was Trump and this whole kind of fiscal play, and we saw those forecasts yesterday and how actually in terms of developed world economies, the US is going to be the outperformer, and that basically is going to drag everyone with it. But if that does not occur and Trump fails to deliver that kind of implementation risk, then obviously there's not a lot there to help support this kind of built-in price expectation, because this is looking at iron ore. Now, you could pretty much map the same thing in terms of US equities, granted not at the highs, but very close to record highs. US yields as well, elevated of course, as too is the dollar. So a lot of this has been priced in quite aggressively already, and so certainly scope for a pullback should Trump not deliver for sure. Moving on to some other things to be aware of from overnight. You had the API crude oil inventories, obviously the front runner to the Department of Energy's reading we'll get later on this afternoon. I think first of all, if you look at the price of crude, let's go to 930, which is here. Actually 930, you can see there's quite a large wick on the upside, but generally speaking, not too much movement immediately there, but when the futures reopened, it did grind a little higher, and we've paired some of the move, but I don't really think that's largely down to the APIs. I think more so if you look a bit more longer dated here on the crude chart. Obviously, yesterday afternoon we came under some selling pressure, went through the 51 handle, so I think this is probably just a bit of profit taking on those shorts from that move yesterday rather than the API data itself. And the reason I say that is because probably one of the lesser exciting APIs that we've seen in recent weeks, the crude number pretty much bang on the consensus estimate, a build of 1.5 million, Cushing draw 187, gasoline a build of just over 1.5 million, distillates a build of just shy of 5.5 million. So of course, as we always say, this is kind of your benchmark now for what's probably priced in as an expectation value for when we get the DOEs to hit at 3:30 this afternoon, but I wouldn't really be banking on this to be too much of an influence for the crude price at the moment, which I think is more heavily driven by the dynamics coming out of the latest updates in regard to the likes of the OPEC, non-OPEC deal, production cuts, to what degree are they taking place, and then countering to that, obviously we had the Iraqi news, Iran as well, causing some complications to the deal, even though they're exempt. But still it's counter to what they're trying to achieve, those other nations, by cutting production if they're ramping things up, record sales. One thing as well that we did see yesterday, now it's a piece of data that generally goes a bit, I would say, unnoticed overall, and that's the NFIB Small Business Optimism Survey. Now it's not really a market mover, but I think the chart I'm going to show you puts things into a bit of context about the current economic sentiment coming out of the US at the moment. So what I'm showing you here is the NFIB Small Business Optimism Index in the middle. That's the blue line, and actually there it was the largest 1 month gain ever for that index yesterday, and it puts the index at its highest level since December of 2004. So small businesses in the US are their most optimistic that they've been since 2004 at the moment. If you're looking at consumer confidence, that's at a 13-year high in the US. And also you're looking at multi-year highs as well in the Philadelphia Fed outlook as well in terms of capital expenditure. So certainly these readings would be reflective of very bullish sentiment in terms of the US economy, which obviously, irrespective of the fiscal kind of repricing on the back of Trump and what he's been saying or indicating that his administration would do, the underlying strength of the economy as well has also been a fairly prevalent theme, and certainly keeping things solid from a a sentiment point of view. So trying again in this environment, shorting US equities is a bit of a tricky thing to do when underlying, away from the more speculative trade on Trump, the overall consumers as well as businesses as well as companies all seem to be very very positive at the moment from a US perspective. I'm sure there will be those calling the other side of it, as in the higher this goes, the quicker, more rapidly we rise, the more aggressively we'll ultimately fall. But looking elsewhere, although there could be an argument for some fragility in the likes of Europe, this is a chart of the FTSE 100. And if I'm looking at it from where we were last summer, which obviously was the Brexit vote, we had that initial pullback from when the vote happened down to the 27th. And then when we were trading at just sub the 6,000 level, we're now up at above 7,250. And if you're looking at the FTSE yesterday, it closed up just over 0.5%, and in doing so, not only notched up its 9th consecutive fresh record high, the longest such run, but it also took its run of consecutive daily gains to 11, which is a feat matched only on 3 other occasions. You'd have to go back to 2009, 2004 and 1997. So, for some of the live guys, I guess, when you're looking at the DAX and how that's traded, I mean, it's been so choppy and it really a lack of commitment on a directional basis. But if you look at the likes of the FTSE, certainly that. I mean, if you look at where we were beginning of December, and certainly mid-December from where we are now, it's been one of the products which I think has had one of the better defined ranges at this present point. And certainly UK data is to be watched closely for, does it continue to deteriorate? But for the moment, if the pound continues to weaken, the thing that I guess that we have been seeing for sure is that the weaker that pound goes, the more it generally starts to influence that trade, that the FTSE just keeps powering higher. And obviously in terms of the pound, we've had a bit of weakness at the beginning of the week, fairly large move on the back of Theresa May kind of hinting towards hard Brexit. That kind of pullback has certainly brought this FTSE play back in. Let me just have a look at the cable price action here. We had that kind of Theresa May reaction again. We got down to lows of 121.23 yesterday. We pulled back slightly, but obviously that 121 handle is kind of the next big target to look for. And then beyond that, obviously we had that flash crash on that overnight session on the 7th of October, which is sub that level. As I've said before, it does to me feel like a sense of inevitability about getting there in the near term, especially in the context of what generally I foresee as a firmer dollar going forward. So maybe the play is continuation as a directional bias in the coming weeks for that 121 is a really key level. Break of that, I would imagine, would start to see some further, more heavy downside pressure. And if that materializes, then certainly, if any recent trend is to go by in correlation, then that FTSE trade probably would still remain in play for the time being. Just moving on, some other stories though to be aware of before I go on to the Trump situation. And one thing I asked a few of you guys this morning in the chat room was about your thoughts about the UK housing market. Foxtons this morning getting absolutely hammered, down over 12%. They've said that their profits, their adjusted earnings for 2016 were down nearly 50%. And, well, Will being a true Londoner, just saying, well, thank goodness for that, because anyone who doesn't live in London, they're not the most popular people that you see day to day or certainly on the roads. But Foxtons down 50%. And certainly they're seen as kind of one of the most prevalent estate agents, certainly in London. But they've also made a warning for 2017 is going to be another very challenging year. So an interesting thing about London, I was just talking to one of the guys in the new room, is that there's such a cross-section in such a small area. You've got the really high-end areas falling double-digit in kind of central West End territory, whereas if you go East London, kind of further east than Stratford into kind of Dagenham area, prices are up 10-15%. Certainly those kind of value areas are getting a supreme boost on the back of the fact that the unaffordability, with it something like 14 times earnings now for an average house price, but certainly something that's quite interesting, I guess, from a single stock perspective. I certainly would be keeping an eye on some of these names. People like Rightmove and so on, they are listed companies as well that could be tradable in this situation if we do start to see a bit of a correction in these house prices. Right, moving on though. Trump, I'm sure you've read the headlines by now. Trump said to be told of unverified Russian intelligence. This is kind of the story which is getting plugged across much of the main news agencies this morning. Let me just flick it over here on my screen. US intelligence officials have informed the President-elect Donald Trump about unsubstantiated reports that they've received that the Russian government has compiled potentially damaging personal and financial information on him, according to a person familiar with the situation. So this has come out on CNN last night. Now, obviously, you could call me a cynic, but the timing, of course, comes ahead of he's speaking in only a few hours' time. I've got confirmation on the timings of his speech from New York City. That will be at 4 p.m. London time, so 4 o'clock this afternoon. So we'll all have a chance to hear and trade that event, which, as we've been saying from the beginning of the week, arguably is the biggest trading event of this week in its entirety. Now, the reasoning for this is because his acceptance speech, so to speak, on the election back in November was a very rehearsed speech, very presidential. He would have had time to deliver that. It was a fairly vanilla speech, I guess, in terms of him being able to put his foot in it. It was just, of course, just kind of acceptance, so to speak. So two real key things there. How does he handle it? And whether he fleshes out the desired direction of policy, which has obviously been such a defining factor which has driven financial markets over recent weeks and months. Most interesting will be about tax reforms, foreign policy, border taxes in particular. Now, actually, this CNN report about this US intelligence and about allegations that Russia has kind of some sort of information on him, or to pin on him personally, I think this is troubling in regards to how he's going to perform tonight, because Donald Trump has proven that it's very easy to kind of agitate him. You've seen that just this week with the Golden Globes and how he responded to that via Twitter. I think that now this has come up, the timing is very interesting, because I think what he would have tried to have done, and I think actually if you were to ask me this question yesterday, if this didn't materialise, this story overnight, I actually think that he would have managed today's press conference okay. I think he would have been practicing this, and he would have been looking to do exactly the same, because this being a more formal speech for the first time he's spoken since that election night. Actually now, I think what the press will focus on is this development that's happened overnight. And actually I think that this is only going to stoke his fire, if you like, and then he's going to lose control. And I think at this point he's a person which lacks that kind of much needed control to give a more measured performance. I think now you can kind of almost goad him into losing, let's say, his presidential delivery he did before, and this is going to land him in some hot water. Now this is absolutely perfect then for us trading this event, because the more he goes off piste, and if he's talking about things like foreign policy, tax reforms, border taxes, these are all things which definitely could have a direct influence on market pricing, and hence throw up certainly some opportunity for us to trade. So 4 o'clock, I would say, is a big event. Now, looking at the calendar for today, that does mean then that the market could have the propensity to be fairly quiet leading up into that event. If you think about it, this could be a situation of like when you get a non-farms morning. Everyone knows that at this point in time in the afternoon, that's when the big event is going to occur. So as such, people sit on their hands accordingly. If you think about the larger institutional flow likelihood, no one's going to be executing large kind of block trades ahead of what could be high volatility if something out of turn is said from the president-elect. Will making a good point as well. I would definitely be keeping an eye on Twitter, something which I spoke about earlier in the week that I've kind of identified a rough pattern. It seems like as soon as Donald Trump rolls out of bed, he fires out a quick succession of tweets. Now that tends to be London time between around 11:30 to 11:45 is when you get the first kind of 3 or 4 tweets that he fires out. So obviously that's early morning his time in East Coast. I would imagine his advisors have told him, don't say anything, you're speaking later on. I would say that probably holds absolutely zero weight as to what Trump will do. So I would be very mindful of just keeping an eye on some tweets coming out of him as we go through that kind of North American crossover time from around 11:30 midday our time. So Twitter could come into play here. Otherwise, looking at the calendar, from a UK perspective, 9:30, there are a couple of things to look out for. You have the industrial and manufacturing production figures. Now, I'm not going to dwell on these too much because, as you can see here, they come in combination with construction output and trade balance. So normal circumstances, you would say, well, that's a real slew of economic data, some of which is typically tier 1. They would all be quite important. But these are all November readings, and we are obviously now coming up to mid-January. So these are fairly dated readings. The only thing I think that would potentially cause ramification for the sterling market is if they come out exceedingly weak, then I would be more interested, particularly in the context of the more downward trend that cable's been in. The recent low comes in not far from current price action, certainly not out of the scope of being tested in today's session down on that 121.23 to keep an eye on. Then obviously, as I've been saying, that 121 would be a kind of key target there for that price action to be tested. But other than that, looking into the US afternoon, you get there's no major 130s. The NISA GDP estimate is really a non-event as well from a UK data perspective. Obviously, the crude oil inventories will provide a little bit of noise on the session for oil prices, certainly, but given the APIs were nothing really out of line, not expecting too much there other than short-term volatility in crude oil itself. But I'd say the implication for that to feed across into other asset classes, i.e. equities, may be limited by then people awaiting Trump, which of course comes at 4 p.m, which is ultimately the bigger event. As you can see here, Mark Carney, the Bank of England governor, is also speaking. I think this is to the Treasury Select Committee, presenting the Financial Stability Report. Once again, this historically is really a non-event. Doesn't really give anything new in terms of policy thinking from a monetary perspective or any updates on the economy, but he is in a kind of conversation with these committee members. So I would also keep half an ear open as to what he's saying. That usually goes on for an hour or two as well, and that gets underway later on this afternoon. That's pretty much your state of play. So obviously a big event coming later on in the afternoon means that I think you need to act with a kind of realistic expectation of what you're going to get out of this morning. So I would not be chasing things too aggressively. You want to be in a position certainly where you've still got the opportunity to be able to have plenty of firepower left for if he does say something unexpected, because that certainly is going to have an immediate direct impact across assets, and you want to be able to trade that event accordingly. Okay, guys, coming up to 9 o'clock then. Going to leave it at that. So any questions, then please do just pop them in the chat. More than happy to help. But enjoy your trading day. Thank you.